Good afternoon, ladies and gentlemen. On behalf of MCB Bank Limited, I warmly welcome you to today's corporate briefing session. My name is Khurram Saeed and I will be moderating today's session. The purpose of this session is to present the bank's financial performance for the year 2025 and to highlight the key drivers behind these results. I would also like to extend a warm welcome to our esteemed panelists for today's session. Mr. Mohammad Naman Chuktai, President and CEO of MCB Bank Limited. Mr. Hamad Khalid, President and CEO of MCB Islamic Bank, a wholly owned subsidiary of MCB Bank Limited. Mr. Fareed Ahmed, Group Head Retail Banking. Mr. Muhammad Ali Yafiz Gardezi, Group Head Trading and FX. Mr. Anjum Javed, Chief Financial Officer. Mr. Hamza Taimur, Divisional Head Financial Control. Before we begin, I would like to highlight few housekeeping points. Kindly keep your microphones muted during the session. You are encouraged to submit your questions via the chat box. Question will be addressed during the question answer session. Please note that this session is being recorded. Thank you for cooperation. Let us now begin today's session. I would like to invite our Chief Financial Officer, Mr. Anjum Javed, to walk us through the financial results and key performance indicators for the year 2025. Sir, over to you.
Assalamu alaikum everyone. Let me begin with a brief overview of the group structure. MCB Bank was incorporated in 1947, nationalized in 1974, and became the first bank to be privatized in 1991. The bank maintains the highest credit rating of AAA for long-term and A1 plus for short-term from PACRA. MCB is a flagship entity of the Nishat Group, one of the Pakistan leading conglomerates with diversified interests across textile, cement, banking, insurance, power generation, hospitality, asset management, agriculture, dairy, auto manufacturing, and paper products. The Nishat Group is among the largest private sector employers, exporter, and taxpayer in the country. The bank entered into strategic partnership with Maybank in 2008, which currently holds an 18.78% stake. The bank has a controlling stake in 4 subsidiaries: MCB Islamic Bank, MCB Investment Management Limited, MCB Closed Joint Stock Company, and MCB Exchange. It also holds a 20% stake in Adamji Insurance and 30% in Euronet Pakistan. Now moving on to the next slide regarding footprint, the bank maintains a strong domestic and international presence with over 1,400 branches across Pakistan, covering more than 700 cities, towns, and villages, along with 8 overseas branches across Sri Lanka, UAE, and Bahrain. On a consolidated basis, the bank operates the second largest branch network with 1,724 branches. Now moving on to the next slides, which provide a snapshot of bank customer base and market positioning. The bank serves over 9.5 million customer accounts. In terms of market share, the bank holds 5.53% in deposits, 4.64% in advances, and 7.71% in foreign trade of Pakistan. In the home remittance segment, the bank is the third largest player with market share of 10.94%, channeling $4.4 billion in 2025. The bank declared the highest dividend per share in the industry of ₹36 in calendar year 2025. Now moving on to the digital journey of the bank, MCB Live continues to demonstrate strong traction, reaching 1.9 million users. Digital transaction throughput increased from 1.7 trillion to 3.3 trillion, reflecting an 86% YOY growth. While the digital transaction mix improved from 72% to 77% in 2025. POS acquiring increased by 12% to ₹120 billion, e-commerce acquiring by 17% to ₹29 billion, and debit card spend increased by 37% to ₹98 billion. Now turning to the financial position slide, total asset increased by 20% from ₹2.7 trillion to ₹3.2 trillion. Gross advances closed at $736 billion, declining by $358 billion, mainly in the short-term corporate advances. The reduction is due to the withdrawal of ADR-based taxation, which led to an industry-wide contraction in advances. During 2025, Consumer advances of the bank increased by 36%. Asset quality remained strong with the NPL declined by 3.8 billion to 49.8 billion, supported by strong recoveries and charge-off of rupees 2.1 billion. Coverage ratio stood at 92.47% with an infection ratio of 6.76%. The domestic NPL remained at 5.04% below the industry average of 6.07%. The investment portfolio increased from 1.2 trillion to rupees 1.9 trillion, primarily driven by government securities. Floating rate PIBs increased by rupees 580 billion to rupees 1.2 trillion. Fixed rate PIBs increased by 154 billion to rupees 404 billion. T-bills increased by 36 billion to rupees 113 billion. Portfolio yield stood at 12.32% in 2025 compared to 18.60% in 2024. Weighted average time to maturity of fixed rate PIB stands as 2.28 years with purchase yield of 12.62%. On the liability side, the bank delivered strong deposit mobilization. Total deposit increased by 18% to rupees 2.3 trillion. Current deposit increased by 19% to rupees 1.2 trillion. Current account mix at period end improved to 54% versus 49% in 2024, whereas average mix improved to 52% from 47%. CASA ratio strengthened to 97.4%. The domestic cost of deposit declined significantly from 9.98% to 4.88%, down by 510 bps year on year. Total equity increased by 17% to rupees 316 billion. The next slide covers the summary of balance sheet from 2022 to 2025. Over the last 3 years, total asset increased from rupees 2.1 trillion in 2022 to rupees 3.2 trillion in 2025, reflecting a CAGR of 16%, primarily driven by investment growth. Investment increased from 979 billion to rupees 1.9 trillion with a CAGR of 26%. Deposit grew from 1.4 trillion to rupees 2.3 trillion, reflecting a CAGR of 18%, with the continued strategic focus on the current accounts, which grew at CAGR of 21% to reach 1.2 trillion in 2025. Now moving on to the profitability slide, net interest income declined marginally by 2% to rupees 146 billion, despite a sharp 42% reduction in the average policy rate from 19.38% to 11.29% in 2025. Non-market income stood at 35.8 billion, down 4% year on year, primarily due to the low fee income and reduced gains on securities. Fee income declined by 9%, mainly due to the competitive pressures in remittance, resulting in negative income of rupees 3.3 billion during the year. Card income increased by 18%, branch banking fee increased by 13%, dividend income increased by 45%, FX income increased by 11%. Operating expense increased by 12%, driven by compensation adjustment and headcount expansion, along with the impact of minimum wage on outsourced services. Other expenses increased at higher technology expenses, SMS cost, and market outlays to support remittance flow. Cost to income ratio of the bank reported at 37.7%, significantly below the industry average of 46.4%. On provisioning, the bank recorded a net reversal of 5.3 billion compared to charge of rupees 4.3 billion in 2024, supported by strong recoveries and reversal of general provision booked in Q4 2024. Standalone profit before tax stood at 115.5 billion and PAT of 54.2 billion with EPS of 45.73 against the 48.62 earned in 2024. Consolidated profit before tax stood at 125.1 billion and profit after tax at rupees 58.8 billion with the EPS of 49.29. Capital gain of rupees 6.6 billion on fair value through other comprehensive income equity securities were recognized directly in statement change in equity rather than in profit and loss account post implementation of IFRS 9. The bank reported
a return on asset of 1.82%, and a return on equity of 23.02%, reflecting strong profitability. The next slide covers the summary of profitability from 2022 to 2025. Over the last 3 years, net interest income increased from 87 billion in 2022 to rupees 146 billion in 2025, with a CAGR of 19%, primarily driven by volume growth in current deposits. Non-interest income grew at a 3-year CAGR of 13%, where the non-interest expenses increased at a 3-year CAGR of 18%. Profit before tax increased from 71 billion in 2022 to rupees 116 billion in 2025, with a CAGR of 17%. EPS increased from 27.63 to rupees 45.73, while dividend per share significantly increased from rupees 20 to rupees 36, with the payout ratio improving to 79%. Now moving on to the next slide of key ratios. NIM declined from 6.2% in 2024 to 5.1% in 2025, primarily due to the policy rate compression. The bank market share of total domestic deposit decreased from 5.7% in 2024 to 5.5% in 2025, where its market share of current deposit improved from 6.5% to 6.6%. CASA mix improved from 49% in 2024 to 54% in 2025. Infection ratio increased to 6.8% in 2025 versus 4.9% in 2024, driven by denominator impact from reduction in gross advances. Cost-to-income ratio rose to 37.7% versus 32.7% in 2024, still well below the industry average of 46.4%. Home remittance market share declined from 13.3% in 2024 to 10.9% in 2025. In competition, however, the bank retained its position as the third largest player in home remittance segment. Now moving on to the operating segment as per IFRS 8, retail banking profitability declined primarily due to the lower interest rates. Treasury performance improved, benefiting from the balance sheet repositioning. Corporate banking remained broadly stable with some pressure from remittance-related cost. Consumer banking posted marginal improvement. International segment saw a slight decline due to the lower interest rates in Sri Lanka and ECL charge in UAE. Now moving on to the capital adequacy ratio slide, the bank maintained a strong capital position. CAR improved from 19.35% to 19.53%, well above the regulatory requirement. Leverage ratio, liquidity coverage ratio, and the net stable funding ratio are well above the minimum regulatory requirements. The next slide covers financial performance of MCB Islamic Bank, a wholly owned subsidiary of the bank. MCB Bank demonstrated a strong performance in the balance sheet growth. Deposit increased by 29%, equity increased by 7%. However, the profitability declined by 46%, primarily due to the sharp decline in the policy rate and the implementation of minimum deposit rate effective January 2025. The next slide provides detail of awards. During the year, the bank received multiple recognition: fastest growing corporate bank in Pakistan by International Finance, runner-up for best corporate report by ICAP and ICMAP, and silver award from SAFA. The bank also retained its position among the top 25 companies of TSX and remained the third largest player in the remittance segment as recognized by SBP PRI. The next slide provides an overview of the key business risks along with the bank framework and governance structure in place to manage these risks. Going forward, the bank will continue to focus on maintaining asset quality, strengthen current account mobilization, and ensuring cost discipline. Thank you.
Thank you for the insightful presentation. We will now move to the question and answer session. As a reminder, you may continue to post your question in the chat box. Question will be taken one by one and directed to the relevant speaker. We have already received some questions in advance. Let us begin with those. The first question is, can you please share the breakdown of the bank's PIB portfolio between fixed rate and floating rate instruments?
Within PIB's portfolio, 75% are the floating rate and the 25% are the fixed rate PIBs.
Okay, thank you. This question was also asked in the chat box. Hopefully, this have been well answered. The next question is, what is the average yield and average maturity of the fixed rate portfolio?
The fixed rate PIB portfolio carries an average yield of 12.62% with the weighted average maturity of 2.28 years.
Thank you. The next query related to fixed rate PIB portfolio scheduled to mature during 2026.
PKR 34 billion is scheduled to mature in July 2026.
The next question is related to the average spread on floating rate PIBs over the T-bills rate.
The bank is earning average 107 bips over the benchmark T-bills rates.
This question was also asked in the chat box. The next question relates to deposit growth target for 2026 and what proportion is expected to come from low cost deposit.
We will continue to build on the momentum achieved in 2025 and expect similar growth level in 2026 with the primary focus on zero cost current account. We aim to maintain current account concentration above 50%.
Thank you. The next question is related to capital adequacy ratio of the bank. With SBP's phased declassification of FVOCI into the trading book, what would be the estimated impact on market risk-weighted assets and capital adequacy over the next 2-3 years?
MCB has not awaited any relaxation from State Bank. The bank has already classified our fair value through other comprehensive income investment under the trading book for market risk purposes. So no impact on the market risk weighted asset or the capital adequacy ratio.
The last question, advanced question, is regarding the geopolitical situation. How do you expect the current conflict to impact the bank's revenue and margins this year?
I think at this stage we do not foresee any compression in the revenue or the margin of the bank. However, the inflation may lead to some increase in operating costs and rise in the yield bond will offset the impact to the bottom line.
Okay. The one question that is frequently being asked is target cost to income ratio for 2026.
The bank cost to income ratio of 2025 stands at 37.7%, which is well below the industry average of 46.4%. And we are targeting cost to income ratio below the 40%.
Okay, thank you. The next question is, has floating rate PIBs reset in Q4 2025?
Yes, the 50% of the portfolio reset in the Q4.
Okay. Then car growth, estimated car growth for 2026.
I have already responded that we are expecting similar growth level which we have achieved in 2025.
Okay, thank you very much. The next question is, what is the current spread on Pakistan investment bonds?
For fixed rate is the 12.62% yield, where if the question is related to the floating rate, we are earning 107 bips above the T-bills rates.
The next question is there any repricing expectation in Q1 2026?
Yes, 50% of the floating rate PIBs will reprice has been repriced in the Q1.
The next question, and you have already responded. Can you provide guidance for cost to income ratio? This has already been responded. And now we will take the last question. What is your outlook on interest rates moving forward given the retracing of oil prices and ceasefire developments?
We believe interest rate have bottomed out, and with the potential rate hike possible in the April or June, though yesterday yield dropped across all tenor by 21 bips to 85 bips, but still yield on bonds are up by 100 bips to 179 bips across all tenor over the past 2 months, which signal that the market is expecting to rate increase in upcoming monetary policy.
What is the target for branch expansion during 2026?
We are targeting 40 to 50 branches in 2026.
And that concludes the question and answer session.
Quram, we have hands raised, so we have to unmute them.
The next question is from the line of Mr. Muhammad Hanif. You may talk now.
Hello, ji assalamu alaikum. Can you hear me?
Yes, we can hear.
जी मुझे मेरा सवाल आपके यूएई बिजनेस के हवाले से था एंड गिवन द सिचुएशन दैट वी आर इन राइट नाउ तो आप लोगों को कोई हेडविंड्स नज़र आते हैं फ्रॉम अ प्रोविजन पॉइंट ऑफ व्यू?
Currently, तो ऐसा कुछ नहीं है. And we do not expect any increase in the NPL or the credit charge in UAE.
Yeah, just to add to that, we just reviewed our portfolio in Dubai. No, we don't have any major concerns at the moment. As Anjum mentioned, there is no major expectation of any NPL at the moment. However, if the situation reverts to the pre-ceasefire situation, then we'll have to see how the economics of the UAE goes.
Okay, thank you. And I believe part of this second question was addressed. Given the very volatile movement in secondary market yields, I believe making a decision or taking a view on the interest rate is very difficult. What's the bank's strategy during this time? And that'll be all from me. Thank you.
Anjum mentioned that a significant part of our portfolio is floating rate based. So that speaks for itself actually. But we are not taking any major positions on the speculative part of the question. If there is an angle from that perspective. At the moment, we feel that the central bank with the ceasefire in place is not likely, in our opinion, to move the rates either way. However, going forward, that is something that will need to be seen. But at the moment, the expectation, I think, in the market before the ceasefire was that the rates would be increased. We feel that there's a considerably less probability of that happening at the moment. Can we move on to the next gentleman with the questions? It's question has been answered.
There is no more this hand. Let me check once again. Mr. Muhammad Hanif. Mr. Muhammad Hanif, you may ask the question. If you can.
सर ये बताइए कि आपका एग्रीकल्चर में कितना मार्केट शेयर है? इस 2025 में हमने एग्रीकल्चर में 74% ग्रोथ जरूर किया, लेकिन ओवरऑल मार्केट शेयर is on the lower side.
तो इसका कोई रीज़न देंगे लोअर साइड की क्या वजह है?
Now we have started focusing on the agriculture. As I mentioned that we have increased 74% in 2025, and we are hoping to keep focus in 2026 as well.
No, sir. And that concludes the question and answer session. Before we conclude today's session, if you have further queries, please feel free to reach out to us at investor.relations@mcb.com.pk. The bank will review all submissions and respond accordingly. We sincerely appreciate your participation and engagement. Thank you and have a great day. Thank you very much.